Eric Wiegand, stocks were flat in the first quarter. A lot of people didn't expect that at the start of the year. So what does that say about the economy?
You know, it really points to the overall level of frustration. The economic data has tended to be on the mixed side, where we had previous decoupling where the United States was a source of strength. We're now seeing some softening in the data there and actually seeing some, in Bernanke parlance, some green shoots, particularly in the Eurozone. So it's tended to create a frustrating environment.
So what should we expect when earnings season officially hits in a few weeks? Who's going to get hurt the most?
You know, the sensitivity for earnings is going to be around those companies that have much more currency or commodity-oriented exposures. So there's going to be very keen interest, particularly on those segments. And we've seen a little bit of that differentiation already in the markets. Domestic-oriented shares, small-cap companies, the domestic consumer discretionary, have tended to fare much better than the more multinational-type stocks.
And lately we've seen oil tick up as a result of some geopolitical discord, whether it be in the Ukraine or with regard to Iran. Is this a good thing or a bad thing?
You know, it's a bit of both. Unfortunately, I think from a supply standpoint, we continue to see supply is actually expanding. But to the extent that we're beginning to see some of these geopolitical situations having some resolve, or at least beginning to see some stabilization in the underlying price of the commodity, we do think that that's good. Still an area that we're somewhat guarded on and really want to see a better profile as far as demand is concerned.
All right, and staying with oil, when will consumers start spending that low oil dividend? Did not happen in the first quarter. It's going to happen in the second quarter?
You know, we're hopeful. We want to get more information and indicators of the consumer finally letting loose a little bit with the pocketbook. We've clearly seen that consumer confidence has improved. We're seeing improvement as far as housing prices. But a lot of the actual data has been impacted not only by weather, but also some falling commodity prices themselves. So we want to see a real expansion in consumer spending in order to get that confidence up.
And then finally, speaking of that data, it really has been a bit tepid of late. So what should we believe? All these weak consumer and retail and durable goods numbers, or those great jobs numbers we've been getting every month and that we can expect this Friday?
You know, it is both. Hate to hedge the story there, but the real story on the jobs figure, and we got a little bit of an indicator in that with the ADP figures that came out this morning. We're seeing much more vitality, particularly in small companies, small businesses. Even among survey work, those small businesses have indicated that a willingness and an expectation that they're actually going to be increasing wages. So wage growth, along with job growth, we do think that will provide for a more robust backdrop for the consumer. But we're still, waiting for that proof point. There's been some reluctance to unleash some of that newfound gains.
All right, thanks a lot, Eric.
Thank you, Greg. Appreciate it.
Thank you for watching The Street.